Welcome back, and in your top business story, Dubai International Airport is the fastest growing airport in the world, as measured by annual seat capacity growth and according to the latest statistics from OAG, the aviation intelligence company. The OAG Frequency and Capacity Trend Statistics report for April shows that 757,000 additional seats will be available from Dubai International compared to April last year. The figures also show that the Gulf Aviation Hub has increased capacity by an average of 12% per year since 2004. The second fastest growing airport in terms of seat capacity is Malaysia's Kuala Lumpur International, which has added 552,000 seats over the past 12 months. Istanbul Ataturk Airport, recently named the fastest growing airport of 2012, as measured by annual passenger numbers, is placed third, having seen the number of seats rise by 529,000 between April 2012 and April 2013. Last month, Dubai International Airport was confirmed as the world's second busiest airport for passenger traffic, according to figures published by Airports Council International. Dubai moved ahead of Paris Charles de Gaulle Airport for the first time. Since the start of the year, Dubai International has moved up 2 positions in the global rankings and now has London Heathrow's title as the world's busiest international airport firmly within its sights. Emaar Properties will hold its annual general meeting on Tuesday to discuss the proposal of distributing a 10% dividend to its shareholders. The board's proposal, which is the same as the past 2 years, comes after the Dubai developer recorded full-year net profits of 2.119 billion dirhams in 2012, 18% higher than the previous year. Annual revenues for 2012 reached 8.240 billion dirhams, marginally higher than the figure for 2011. Emaar, the UAE's biggest developer by market value and owned 31% by Dubai's government, did not distribute dividends in 2008 and 2009. According to data compiled by Bloomberg. Emaar's revenue from sales of apartments more than doubled last year, offsetting a sharp drop in sales of commercial units that is still struggling to recover. The builder of the world's tallest tower generated revenue of 2.5 billion dirhams from sales of condominiums last year, compared with 1.1 billion dirhams in 2011. However, income from sale of commercial units, plots and others dropped significantly to 682.2 million dirhams compared with 2.7 billion dirhams in the prior year. Last year, Emaar handed over some 1,100 homes and more than 140,000 square feet of commercial office space in Dubai, as well as over 700 homes and more than 122,000 square feet of commercial space in its international markets. Private sector activity in the UAE remained robust last month, according to data released by HSBC. The headline score eased from 55.4 points in February to 54.3 last month in the UAE, in the bank's Purchasing Managers Index, which covers non-oil companies. A reading above the 50 mark represents an expansion in activity. Output growth in the UAE eased from the previous month, but remained above the series average. HSBC added that the rate of new order growth dipped for the third month in a row, but remained solid. New export business rose for the 34th consecutive survey period, but at the lowest pace since last July. Workforce numbers rose in the Emirates for the 15th consecutive month, in line with the series average. About 9% of firms reported a rise in staff levels, compared to 3% reporting a decline. The survey also suggested fears of a pickup in economic activity and a recovery in property prices. Leading to a rapid rise in inflation may be premature. It showed a fall in output prices last month from the previous month, despite modest gains in input prices. The Middle East banking sector grew revenues by nearly 7% in 2012, according to a new study by the Boston Consulting Group. The report stated that profits rose 8.1% on the back of the 6.9% increase, stemming largely from extraordinary income sources. While banks in Qatar grew revenues by 12% and banks in Saudi Arabia and Oman achieved high single-digit growth rates, banks in the UAE, Kuwait and Bahrain achieved a revenue growth rate of 5% or below. The report showed banks in all countries achieved above 7% profit growth rates, except in Kuwait, which came in at 3%. In 2012, loan loss provisions varied significantly by country, the report added. UAE banks were, on aggregate, able to significantly reduce the existing high provisioning levels by 13%, Boston's report said. The report said retail banking revenues in the GCC saw an uptick of 4% after a number of flat years, largely due to an increase in the three biggest markets, which are the UAE, Saudi Arabia and Kuwait. The BCG index includes 32 banks from across the GCC, capturing nearly 80% of the total regional banking sector.